If you can hear me clearly, please type one in the chat box.
Yes, we can hear you.
Okay, okay. So these are so tonight our topic is last week we talked about upper section that we had. We talked about market structure and we talked about break of structure. And now we'll be looking at the zone in which you can buy coins at discount price, where we also refer to as fair value gap, your entry levels, or you can. So we'll be using some nice coin for tonight. Probably let's be going with BNB, BNB chart. Let's talk on the chart. Network is a little bit slow, like almost last week. Well, I said last week, last section, which was on. I don't know what's wrong with this network. I'm coming. Tap, tap, tap. Okay. Can you all see my screen? Is-
Yes.
Okay, okay, okay. Probably I have to close up some tabs here. That's why I have a lot of things going on here. So yeah, okay. Let's dive right into the topic for tonight. So we talk about us having our fair value gap. So let's draw a structure here, like we did from the previous class. So this is a scenario of an uptrend. So we have our structure like this. We are having a higher high and higher lows. So if you all can remember vividly, we say for us to have an uptrend, we have to have a scenario like this in which we'll be having a higher high that is creating impulsive move to the upside, and we're having a pullback leg to the downside. But then another impulsive move to the upside. We have a pullback leg, and we can clearly see from these ranges that I'm drawing here, because we know markets always move in waves, right? It doesn't just move in direction, in a straight direction. In fact, if we come to our chart right here from this section, the same thing I'm demonstrating to you from this side, you can see from here. So we have to train our eye very well to be able to identify those moves in the market. So now we see in this scenario here, market doing the same thing here that I just drew to you. So you can see this market is still currently in an upward move, but even though from here, it's still a little bit like choppy. It's moving in a range here. So it's quite indecisive. Here we have Solana USDT, right? We talked about support and resistance level. So if we should draw our trend line here, for those who trade, the traders who trade the price action, they can take entries here, right? They call this pattern here. So there's a pattern here. There was topics. If some people here maybe that knew about our that were in our first classes of our technical classes will remember when we talked about patterns. So this is a clear head and shoulder pattern. So if you were to be trading using price action, you would see that we taught us here also, but this is a pattern in which most traders call head and shoulder. So why do they call it head and shoulder? This is a clear indication at times for a clear trade for some traders here who trade price action. So if I was to draw my uh, support and resistance level, and I drew it like this, and I see market move in this manner, so you can see already. So what did market do from here? So if I choose my path two and I see, okay, market came here and then moved backward here, did the same thing again. It faked this breakout, and then what did it do when it get here? Pull back to this level. You can see market was being pushed back down again by the sellers, and then they push it backward again. So we can say that we are having a range here, or we can also call this movement a channel, right? This we can identify this zone as a channel that we talked about, one of the zones we talked about. So if I wanted to draw this channel, I'll just draw from here to this area here, right? We can see clearly that there are torches, right? Like the ceiling we were telling you. So this market is not moving uh, further from these zones here, which is around, Solana is moving around 155 USD, so at around 154, 155, and then it's pushing back down to around this zone here, which we can clearly identify from our chart here, which is around the price of 140, $146. So now the clear torches are clear. You see three times, and as a clear analyst, you want to analyze the past data to be able to decide what market will do in the future, right? So if you see market clearly has done the same thing, high possibility that market is still going to do the same thing all over again. It's going to repeat the same thing scenario. So now, if you wanted to pick a trade here from a range, so we here we actually we told you not to trade ranging market because you don't tend to make a whole lot of money. But we that were using RoyalQ, you can actually make a whole lot of money trading just this zone, right? But then if you were to be like a trader who like you are looking for some uh, high ratios in the market, some rewards like maybe 1:3 ratios in the market, you will be targeting something more than this, right? So if you are a day trader, right, a good risk to reward ratio would be 1:3, then 1:4, 1:6 or so. So, but this is not a good range to target. A good range to target would be like from here, from this zone here, down here, all the way up here. You understand? And for you to catch zones like this is like almost 15%, right? But then if you measure this other side here within this range, here where market is trading, it's just not much, like 5%, you understand? So it's not that much, but let's not divert from well, our main topic for tonight is just to refresh our memory about what we talked about. So now we find ourselves talking about these patterns, right? So most traders will call this head and shoulder. And why do they call this head and shoulder? Because you can see something like this. It has this shoulder here, the left shoulder, and the right shoulder here, right? And you can also call this a channel because you have this channel here, you see, this down zone and this up zone here, right? You draw your trend line. What do? You would wait for a confirmation. When the market dropped to this zone, obviously it did the same thing here, did the same thing. And when it got here, what did it do? It fired up. And when it got here, it did a fake breakout. Then they pushed the market back down again to this area. And then what did it do? It came here again. Now imagine if you took this trade, if you took it around here, you would have gotten out here, you would have entered again, wait for it again, and then you take your profits here again. You come in around this zone again, and then you come out. Now it's doing the same thing, clearly. So now what you would do, you place your buy two here. You would have gotten into this trade. Sorry, a buy two. You put it around here. So your entry would have been here, and then you just wait for it. And then this, and you just wait for either this zone here, or you take your highest high around here. So high possibility, but then since market has been respecting this zone most of the time, you just put it here, and then you just come a little bit down below the recent low, which this is our recent low around here. So you just place it around here. So since we are trading the spot, the only stop that you will be targeting not to get, because you want to get into the trade and come out. So you don't want your money to be stuck on one trade. So this is how you generate signal if you were to be trading just you are using these patterns to like identify trades. So now if I should clear this chart right now and just recap, run on all of these things that I've just shown you before we go to the main topic of tonight. So we are compiling all the knowledge that we've gathered up to this extent to be able to like arrive to this zone before we dive into the strategy that we are teaching you, which is SMC plus the price action. We gave you the foundation of technical analysis, which is price action, reading the chart, and also reading candlesticks. So now, if I was to like just use based on the knowledge we've given you up to date to just trade. So you open your chart, for example, now, right? And you say, okay, this is Solana. You come, you pick the right coin. Now we are using Solana as an example, and we can see a clear trend from here. So if I should draw my trend line from here all the way to this area, we can see that this is an uptrend, and price has this trend has actually broken. So if I was to actually see now what happened here, this 1 hour time zone. So if I time frame, sorry. So on our 1 hour time frame, you can see that this trend has actually broken, but you cannot confirm a break of zone if there is no retest, right, on this same area here. That's actually broken beneath it, right? If I drew it very well right now, and you can see it has broken, right? In fact, it has retested it with this one. So if it doesn't break above this again and move to this upward direction, we know that this uptrend has actually, there's a change in trend right now. So I should mark this out. This is just pure price action. So if price eventually has done this right now, what we'll be looking for if we were just to use this to identify what's the trend? We can see this is an uptrend, but then there's a break in trend, but we are still here. There will be a very sharp confirmation if price is unable to like break back to the zone and it's retesting, and there will be conservative move downside. But then yeah, just to identify the trend. So now for you to know the trend very well, we are doing top-down analysis. For you to do your clear top-down analysis, you want to first mark your structure. So now we'll see. So my colleague, Mr. Abdullah, at the other time briefed us about internal structure and external structure, which we won't be really going too deep into those topics because I know that we have beginners here among us. So to not complicate everything, I would like us to follow our curriculum so as to not complicate everything, but I will break first what it means to have internal and external structure. So I'll clear this out. So for us to do a clear top-down analysis, you want to first identify the trend, starting from your higher time frame. So when we say higher time frame and lower time frame, for the purpose of the newbies who are within us, so we have different time frames when you are trading any asset, any financial assets. For in our own case, we are trading cryptocurrency. So we have different time frame, and every candlestick you see here, we explained all these things when we were talking about candlesticks. So every candlestick you see here, this red one is the sell candle. So which are the bears in the market who are sellers, right? You can say either the sell candle or the bearish candle or the sellers in the market. And the green candles are the candles which are representing the buyers in the market, which is also a bullish candle, right? So now we have this time frame which are like from the monthly time frame, even yearly, from yearly, but then there's also monthly, then weekly, then hourly to the minutes and the seconds, right? So now for us to do our own analysis, since we are day traders, for you to do a clear top-down analysis, you want to start from either the daily time frame or then you can also pick 4 hours, then you pick 1 hour, and then you pick 30 minutes, and then you also do 5 minutes. This, if you don't have a clear knowledge on this, you can visit our YouTube channel where you go to one of the first topic that we spoke about, which was the walkthrough on trading view, when we talked about time frame, and then we also showed you on how you can favorite those. Actually, you can see I have this on my own screen. I use 5 minutes, 30 minutes, 1 hour, 4 hours, and a daily to do my top-down analysis. So now, since we know this is an option, right? We first want to mark out the zones, right? Then for us to do a clear mock-up of our chart, and then to mark out our structure. So you want to do something of such. Right here now, I'll be marking these zones, and I'll zoom in on my chart. So I'll be doing a clear work. So now you can see we are compiling all the knowledge that we've gotten from the last classes. So you want to also be, when you are drawing your chart and you are mocking up your chart, you want to make it look perfect, look neat, so as whenever any other person, right, come to your chart and say, let me see, take a screenshot of your chart and let me see, you want to make sure it's looking nice, right? I like when I'm chatting to make it look clean as much as possible, so as the person who is looking at it will say, wow, this is amazing. And I believe we have people in the house who, when they are working, even when they have their notebook, we have ladies in the house. Some people, when you go to their notebook for like maybe 5 years ago or 10 years ago, you see everything is neat, right? So the same thing we can apply on our chart as well. So now we are marking our structures. So for us to mark this structure very well, you will draw it from the recent high to the body, right? You attach it here. And I hope we can all see and hear me. Please, if you can hear me, you can mute and just tell me, or you type one in the chat box. So let me see if I'm carrying everybody along. So if you can hear me, please type one. Okay, okay, okay. All right, all right, all right, all right. So that's great, that's great. Okay, so now we are marking our structures now, and we said this is an option. So this is 4 hours time frame, right? And I told you we are doing a top-down analysis. In reality, I think drawing my structure here in the 4 hours won't be nice. I'll just use it to identify the trend. So I'll take this off, and we'll do more of our analysis on the 1 hour time frame, but we can also draw our structure in the 4 hours time frame. But since it's not our entry time frame, our entry would choose 1 hour and 30 minutes. And even we can go as low as 5 minutes since we are using the RoyalQ robot. So, we target minimum move in the market like 1 to 3% or so. So we can get those move clearly on our 5 minutes, even in our 15 minutes time frame as well. So we've identified our trend here as an uptrend from our higher time frame, which in this case is the 4 hours. Some people's higher time frame might be daily, depending on you. You can start your analysis from the daily time frame, or you can decide to say 4 hours. For me, I prefer to start from the 4 hours because it actually shows the data very well. So for you to start, just zoom out on your charts. Yeah. When you zoom out, you'll be able to see the overall chart. So if you were to be looking at it in this perspective, you see market actually did a downtrend before, right? So market from this area, you will say it's a downtrend, even if you are looking at from a daily time frame. But then since we have internal and external structure, at times you will be trading, there will be a downtrend, but then from your external structure, which is the higher time frame, the market might be moving uptrend, might be moving downtrend, but then within that external structure, within that external structure, there is an internal structure. I don't know if you can get me. So if you can understand what I'm saying, type 2 in the chat box. If you are following me, type 2 in if you're understanding anything, please just type 2. But if you don't, just say you don't understand, that you're lost, so I can make sure you understand this. So we have external structure and internal structure. So our external structure is our higher time frame, when our internal structure is our lower time frame. So which means right now we can be having this structure here now. So the bigger time frame where you see bigger move, for example, right? If one candlestick, this candlestick you're seeing right here, right? This bullish candlestick you're seeing right here, is this whole candlestick is 4 hours. No, it's daily right here. So we are on our daily time frame. So this candle, just this candle alone, is a whole day, 24 hours, right? But then if I come to the 4 hours right here, this one candle here is 4 hours. So if I was to for me to give you a clearer view on this, let me just quickly do this. So if I was to draw this, let me use our grid line and mark this out. Just a quick one, just to show you what I'm saying. So I mark this thing out right here, and we are just targeting this zone only, right? And we're on our 4 hours time frame. And I say each candle of this one lasts 4 hours. Each one of these lasts 4 hours. So and now I come to our uh, where is the zone I marked out? So right here. So if this is 4 hours, each one of these is 4 hours. How many of these do you think you need? How many of these candles do you think you will need that will give you the 24 hours? You have to count, you have to times each one of this, right? If it's 4, you have to times it by the amount of hours you have in a day to give you one candlestick, which will be the one that will be representing a daily candlestick, right? So now the reverse is the case also for 1 hour. So if each candlestick in our 1 hour time frame is 1 hour, and 1 in our 4 hours time frame is 4 hours, which means you have to divide it by 4 and then you give you 4. So now you have to add up 4 candlesticks in 1 hour to give you 4 hours. So now in our 4 hours, you want to add it up 4 times how many hours we have in a day, which is 24 hours, to give you the daily time frame. So what I was trying to use this line to identify to you was that, okay, I just say I mark out this zone, then I go to a 1 hour time frame so you can see. But then I think I get the explanation to us so you can also understand that, okay. Um, so let's come back to us. So this is our 4 hours time frame. And then we have this structure up here. We identify that this is an uptrend. And now we will be coming to the 4 hours, the 1 hour, sorry. Now here is the time frame where we want to draw our structure. So for we to identify our structure, you want to mark out where the structures are being broken. So now which take us to the next topic, which is the break of structure. So now there is an option from here, from this lower low to this higher high. And then you pick your trend line 2, and then you place it here on this recent high, and then you attach it to the body, directly to the body of this candle here. And then here, there is something we call break of structure, which is the topic of the previous topic before the change of character we talked about, right? So you just short the word and say, okay, we have the whole name is break of structure. So you double click on this line, and then you write here BOS, which is the short form for break of structure. You just double click on this, and it will give you this. And then here you go. So now the next structure we should be targeting, I didn't pick this high here. I had to pick this because this is higher than this. So now we choose this. I just place it right here so that it is more precise. Now for me to identify the next structure, the next break now is a market broke from here, broke this high. When it got to this high here, right, it broke. There was just a little bit of pullback. So if I should go back to like the smaller time frame here, that's where you notice the difference in when we were talking about internal and external structure. So on our 1 hour here, we won't notice that there's a pullback here. We won't notice that there's a little pullback here, but you can actually see it if you zoom in very well, right? If you zoom in very well and you pick your tool here and you go, okay, this is a high, it was printing up candles and stuff like that. But if you see from here, look at, there was actually a little pullback here. And this is what we refer to as internal structure. So creating this high, and then we can see it create this low, we can see it create this high, and we can see it create this high. Within this external structure, there is another structure within it. You understand? So just look at, and you can see so on and so forth. But then we don't have to cover all of this necessarily. The reason why I told you, if we really go on to so we are going a little bit macro. If we go a little too deep in it, we won't be moving forward that much. So I just say, okay, we skip most of the topic in which that will take much time, but as time goes on, if time permits up very well, so we still have a lot of topics to cover. So here, just for knowing sake, that's why I'm briefing also about it. So now you want to mark out the next structure, which will be body to body. You draw from here and you mark here, and you attach it to the body of the next candle. So for you to get it straight, just click on your shift key and it will come up. So you use your mouse. When you draw this, your trend line, pick your trend line and you for those of us who will be using your computer to do your analysis, so you press the shift key and then your line will be shift. Let me delete again so I show you. If I was to pick my trend line tool, I come here, I click on it, I right click from my mouse, and then I will just press down my shift key, and then voila, it will be here and it will be very straight and neat. And then you double click on it, and then you type your BOS on it, so as for you to know this is a break of structure. So you know this recent high was broken, and there was this other zone here, which is the BOS. So now, so on and so forth. So if market continues to do this, right, and we see that it's breaking structure upside, and for we to have a break of structure, there will be an impulsive move to the upside, which is this. Let me show you. So we know that there is an impulsive move from here to this upside. So well, let me actually use the arrow tool to identify this. So I click on the arrow tool. And so we have an impulsive move to the upside. For we to have an uptrend, we have an impulsive move to the upside. And then you write impulsive move. I'll just shorten it. Impulse. I hope. Impulse move. So we have this impulsive move. And then the next thing that follows it is a pullback. We'll have a pullback, leg. You have your pullback move, and so on and so forth, right? So again, you have your impulsive move, and then you have a pullback leg, right? So now for a structure to break, there will be a pullback. But then now the next thing we want to know now is we say, okay, we talked about change of character, but change of character, you use that to identify a change in trend. But then this topic for tonight that we want to talk about, it will not even make any sense if you don't know how to draw your market structure and you don't know how to identify your structure, right, very well, because the topic for tonight, you need it to be able to know where you want to enter a trade, all right? So then we'll say, okay, now we're having an option. So, but then where do I enter the trade? Well, how do I place that trade? We are getting close. So when you know how to know where exactly you have your imbalance, so there are certain criteria for you to understand where you can actually spot your imbalance way. When we talked about candlestick the last time, we described some candlestick, right? We define candlestick and we define their names. We even someone from here from the house were able to identify a doji candle, and if there was a price for it that evening, right? So now, for you to be able to, so we drew on our chart right now. an uptrend. So I'm drawing the same thing here. So we have this. Let me go fast because we don't have much time. We're even almost getting close. So now you have a structure like this. Let me go fast. So you have your break of structure. And then you have your break of structure again, BOS. And then you have another break of structure to the upside. So now you will say, where do I identify my zone to enter? Your zone where you want to, when there's an impulsive move, you know that there will be a pullback. From your pullback leg, this is where you will be looking for an entry. So you know market has done this before. One, and there was a pullback. We did it again. So you definitely know that now there will be a pullback in the market. So you want to wait for the pullback leg. So if market was to be moving like this, your entry zone should be around here. But then, where exactly do you want to enter? Where do you want to place your trade so you can always catch the trade? You want to put it somewhere around here. It's very logical, right? If market is doing this. So you want to look for your entry zone at your pullback leg zone. So where do you want to put your zone at? So this is where we always talk about, okay, it should be somewhere ideally around here, right? It should be somewhere ideally around here and here. But then before we even get to this area, for you to be able to identify precisely where you are going to enter your trade, you want to also be able to read some candle. You want to see some candle forming up. And so this now brings us back to the candlelistic, right? So there is a candle, precise candle, which we refer to as the Marabuzu candle, right? The Marabuzu candle we are talking about right now, the last time we spoke, let me show, let's go back a little bit, let's dive back a little bit to our candlesticks. So a Marabuzu candle will be this. Can we all see my screen? Please, if you can see my screen, just type 1 in the chat box. Oh, we have Mr. Additional here. Please, I didn't even know you are around already. Mr. Abdullah, you are around. No, is this? Yeah, it's him. So we have okay. So this is a Marabusu candle, but then it's not almost, it's just, but it's a little bit strength, but then you would see a 3 consecutive Marabusu candle, right? Where their body are very large and they are of the same sizes. So I would describe to us, I don't know why this is always showing up on my chart. I don't know if it's me though, but yeah. So let me draw an idea Marabusu candle, and I will try to show us in our chat also. So I don't know why this thing always coming up on my chart like this. Anytime I open up the other stuff. Okay, no problem. So a clear Marabusu candle that you will see, a clear example of a Marabusu candle will be this, right? But we have 3 scenarios for you to be able to identify a good Marabusu candle. So what we want to spot is our imbalance, but for you to be able to identify an imbalance, which it's a manipulation candle, right? Which big institution in the market. So we trade SMC, we trade smart money, where the smart money, the big investors, the big guys in the market, where they pumping market money into the market to manipulate price. For example, a pure manipulation in the market is this. You can see, but I will show us how we can spot that real quick. So in fact, if you can see this right here, is what we call an IC, which is an institutional candle. So an institutional candle is not very hard to identify in the market because it's a clear, its body is very large, right? There will be very change in price. Like it impacts the market because the big guys in the market, they use it to manipulate price so as to grab liquidity in the market. So let me use this to draw an idea, my Abusu candle. So let me pick this. So you see something like this. Let me use this trend line instead. So a Marabosu candle is this, which the body is very big and it has a tiny wick. At times, so this is the first scenario of a Marabosu candle. And another Marabosu candle you will see, you will just see it like this, and it will not have the wick, right? It just have just the body. It can, but pay attention. It's at times it doesn't even have it can be a bearish candle and it can as well be a bullish candle, which means for the newbies, right? It can be a bull. So look at this here is an IC candle. It's an institutional candle here. This also is an institutional candle. It's very easy to spot because why? Let me show you why I'm saying. Before I explain and define why we refer to them as institutional candle. So look at here. There is this. So there was one of our leader here that was asking if there were like indicators for us to like identify uh trends and stuff like that, which is leader Temitope. So and then one of our great analysts in the house, my colleague, Mr. Wiz told us that, if you know the best indicator you can have in the market, even though we know that there are nice indicators that are in the market that you can use clearly, but if you know your candlestick very well, if you are good with your candlestick game, you don't need any indicator. You understand? Just know how to read this chart. Know the ABCD of the chart reading, and you'll be a beast in this game. And the aim here is for us to be able uh, to gamify this thing to the extent that when you see a plain chart, you can identify it clearly. So now, for an institutional candle, the body will always be big, and there will be 3 consecutive up candle or even more. But then what we always want to use to identify our institutional candle is 3 clear consecutive candle, and there will be a gap. So when we say there is a gap in between a coin, here is it. Look at, there is this space. If you notice, this first candle and this first and this third candle here, right? This will be the first in our down move scenario, and this will be our last one. But then within this one, there will be a space, there will be a gap. So let me write it here. So there will be this gap in the markets, which is abnormal because why? Is the big guys in the market who are pumping in money here. And if you go and check, the body will always be big. So the Marabosu candle, like I was defining to you, this is the Marabosu. These are Marabosu candles. So the body are always big and it has a tiny wick. At times, the body doesn't even have wick at all. So for us to now see these 3 Marabosu candles forming consecutive to each other, so you always see this scenario. So where you have, it might be this, and then you see something like this, and then you see something like this. This one here, right? It's when you see it and there is a gap between it, between this first and this will be an uptrend scenario. And you see within like this is a very strong one. This is a very strong trend in the market. This is a very strong scenario here. When you see this big gap here, so the gap will be within the first and the third candle, right? There will be this gap. And at times, another scenario again would be, so another scenario you will see in the market. So you have your gap here. Another scenario we see is you having this. It's also a Marabusu candle. This let's say for example, this one is having the body, the wick, right? Don't mind my drawing, but then yeah, just get the point. So then we have something like this. So I drop the needs. So you have something like this, right? It's still Marabusu candle, but then you see the gap that is between this and this. Let's say this also is having a wick. You can see this is a Marabusu candle without the body, without the wick. Those two are with the wick, right? Let me say this wick here is clearly small. And we also have this. So, but regardless, you see that there's a gap. In this scenario, there's this gap here, right? There's this big gap here. This is a weaker one, weaker trend identification, but it's also uh, something that you will be able to use to identify your gap. What we also refer to as imbalance in the market. So there are three scenarios. This is one scenario. This is another scenario. The last scenario would be when you would see, let me see, draw this one so you can get it clearly. So as maybe whenever another person is coming to come and watch this video, I would just know that I gave you the last scenario. So I gave us an indication that, okay, these are my Abusu candles. But then when you want to be able to identify your imbalance zones, this is what you will see. You will see three Marabusu candle forming. You know that your Marabusu candle at times they have wick, at times they don't. And then the last scenario will just be something like this. I was supposed to have like a file, which I have already on my one of my presentation, PowerPoint presentation, but I can't have my hands on it right now. So when I have it, I'll use that when we even go for that. But it's always nice here that I'm able to show you directly from our chat here. So now the last scenario will just be something like this. So you can have this that is having a shorter body. Sorry, that's having a tiny wick. Don't mind my drawing, even though it's not that clear, but just get the point. So we might see something like this. But the essence is you would always see a gap between the uh, the first candle and the last candle. There will always be a gap. And then you see something like this. And then you see something of such a big Marabusu candle upside. maybe without the body weight. It can also be like it's having a week or not. But then, yeah, see this now, if you compare this, so there'll always be something like this, right? You see the gap here? There is this big Marabusu candle here. There is this one with the wick. There is this one, a big Marabusu candle just with the upper wick, right? But then there will always be a gap, right? So now this is what you want to be looking for when you have your structure here. Let's come back to us now. So for you to identify your imbalance zone, uh, so we say we have these our zones here. So now, if you were looking for now, what you will be looking for from this area. So now we have our impulsive move upside, and then we have a pullback leg. Then we have this option. So now within this next impulsive move that this market do now, you are expecting a pullback leg, right? But then within this range, you want to first identify your if you have an imbalance zone around here, right? So now what will you be looking for in this impulsive move? You'll be looking for a clear zone where you check for a 3 consecutive Marabuzu candle, which would be something around your impulsive move. So these are the things you want to look for on your chart. And when you get that, what you will be looking for is your gap. You identify your gap. Then from the next topic, we'll teach you how clearly you'll be able to like measure those zones where the perfect way you put your buy zone at. But then you know that okay, now you will see a clear 3 Marabuzu candle. Let's look for these zones here on our chart. Let me clear up this place. So if I was to give you a clear example of what I'm talking about. So now, this market here is choppy. I can use this as an example. Let's see if we can get, let's use SRP. So I can use that to show you your imbalance zone. Okay. I can, so market here, here also we are not seeing a clear trend to say we want to look for our. We'll also talk about other block, but for tonight, we just want to look for an example for our clear imbalance zone in the market. Here also, I'm not seeing a clear imbalance zone. Let's move to a lower time frame. Let's see. So imagine here. In fact, here you go. But not that clear because why? If I was to draw my trend around here, let's just focus on this area here. So if I was to draw this zone here and come up here and I do something like this, and I say this, and then I say this, this could have been a zone if even though we have our block here, but this is not a good. This is not what we refer to as an imbalance. There's no imbalance, so we don't have our Marabusu candles here. Those are just normal candles. So it's not a clear trend. Uh, we will look for a previous zone. So are we all following up? Are we understanding something? So if you can understand anything, if you are following up, just type two in the chat box. Okay. So the other people, are you understanding what we are explaining? If you are not, please, you can start asking your question. So mm, mm. We have Uloro BT also said he's understanding. Okay, that's nice. We have three people already who are saying, how many people are also are we in this live call? I think we are a little bit, we are more. I don't know how many of us we are here right now this evening. Let me see. We have currently 18 people on this live. Uh, okay, but technical analysis no be. All right. Yeah, well, little. I mean, little by little. So yeah, we still don't have this our clear zone. I don't have a clear entry on this. I wanted to like, but this could have been a good, but it's not a good entry. We should have been looking for our entry around here, this block. But I don't like what I'm seeing here. So let's look for another pair. If you can suggest any pair in the chat box, that would be very appreciative. So I can know maybe we can even do it. We can just analyze one chart right now, look for an entry, and do that as a signal and drop to the group also. Even though we haven't covered all the topic, but then I want to use one pair as an example for the topic we are covering tonight, which is our imbalance zone. We've thought of how we can spot the imbalance zone, but we want to spot it on our chart. It's a clear example of the topic we talked about this evening. So you know that for you to get your imbalance zone, you first draw your market structure, then you identify your break of structure. Then in the uptrend scenario, now you want to, in your pullback leg, you want to look for your three consecutive Marabusu candle. I told us about how you can identify a Marabusu candle. A Marabusu candle is a big candle, right? Which is an institutional candle, right? An institutional candle says that they form, it has a big body, a smaller wick. At times, it's just a full body without the wicks on it. And then they form consecutively, three of it, and then so it shows up in your impulsive move when you see it and it's giving you a clear gap. So there will be a gap between the first and the third candle in your uptrend scenario. If it's in your downtrend scenario, it will be, the gap would be at the center, yeah, between your last candle and your first candle. It will be it must be a Marabusu candle. So for you, the criteria you have to meet before you can define a clear Marabusu candle and an imbalance. So we also refer to it as an IC, which is the institutional candles. If we call them IC, there are three candles, right? So you say three soldiers. When the guys who trade who trade I don't even know that trade using your candlesticks, right? They call it at times, I think they call it they have a name for it. Every trader has a name for it, but the general name you always find is three soldiers or something like that, which I was showing you from here, right? Which is this. And in fact, you can see from here, right, that it's showing you a gap here. In fact, you see these are having the wicks, but then if you check from this last candle, this third candle, from the first one that I printed, you see there's a gap, right? Difference from this, you can see here, you also have three candles, but then there's no space in it. you cannot consider this as an IC candle, your institutional candles. You cannot consider them. They are not. Those candles as well, but this is a little bit strict as a picture. But this is what you call a clear Marabusu candle. And I showed you the three scenarios, right? All these candles that you are seeing, they have their names, right? And we defined them the last time, right? We defined the candles and they have their name. You have your inverted hammer, you have your piercing lines. We defined all of this, right? So now, since we are talking about our IC candle and how you can define them, now we define it to you. You know that you will have three consecutive candles. In fact, right, even though this is not a clear trend for trade, but your clear Marabusu candle, right, is this. Right? If we were to be taking this trade from a lower time frame, you will be able to like use this, right? But this is a weaker one. So I told you, I showed you three scenarios and I told you that the one with the lesser gap within it are actually weak, right? So now this is a weak one. This is a weak scenario here. You can see this is a clear, those are clear three Marabusu candles, but then we can use this to pick a trade or just an example of what you can use to do. So now you can see if I should draw this and I also draw another line within the last one, which is here, the third candle, because you just have to count. It's not hard. Look at this is your first one, second, and the third, right? And those are clear bullish candles because it's green for newbies. So now you will then draw this. In fact, if you were to be looking for the gap, let me zoom in very well. So you see, in fact, if you were to be looking for the gap, so now let me just take my arrow to, you can see from here, this is the gap we are referring to. You can see clearly, right? Between this one, the first candle, the third candle, this will be our second candle. There is this gap between it. And this is a weak scenario here, right? The trend that the move this candle with, the move this trade will do is very weak. It's true that smart money joined this market. So when I say smart money, those are just terminologies we use in a trading world. We call them trading jargons, right? So we can also we refer to this as smart money. The institutional candles are it's still the same thing, right? We're talking about the same thing. When we say institutions, we are referring to hedge funds like, the big guys. For example, you can, MicroStrategy, for example, those are big banks. They are big institutions. They are hedge funds that enter the market with billions and billions of dollars in the market that push the market. So we are talking about people who trade with, uh, they don't trade with our native charts here. Now you will see they trade with other charts, and you have to have more knowledge in economics and finance stuff to be able to like read have what they do. But then regardless, with these two we have and the tools retail traders use daily to chart, you are able to also do big things, make money and make a good living from it. So you can say MicroStrategy is one of them, which Michael Saylor is their CEO, it's their boss over there. And we have other like Grayscale and more other institutional bodies in the market, right? So now this is a weak scenario, and let's look for another scenario as well, even though we won't be entering the trade, but then we just want to look for the scenarios, right? So you can see here also, look at, this is a very, very clear example of a good example of what I'm talking about. Look at, they actually manipulated price here. And then the next thing you will see, they will drive it back down. This is just a 30 minutes chart, right? This is why you are seeing it clearly there. But if we were to go back to a higher time frame, this candle that you see is big, won't be that big, right? It's actually big there. You see, it formed just one candle here. And you can see it's a very, like, it's manipulation in the market. In fact, the third candle here is of a downtrend, like it's for a bearish one. And this is actually a clear example of manipulations, and it's an IC candle, right? You see the first, second, and the third. This is also a clear scenario, right? So if you have any question, you can come up with your questions, because this is the aim of the topic for tonight. So we know that, okay, so to recap everything we just said, right? You have your market structure like this for an uptrend scenario. And then there is this uptrend, and then you want to enter. Now you know that market broke structure to the upside, did this, and did this, right? The next, and there's an impulsive move upward here. So market already did this pullback, and then before it did this move, it actually came to pick order around an order block here. So for you to be able to draw your clear order block, we have not covered order block yet. We're just covering the topic next to, I think from our next topic, we'll be talking about how you can identify your order block and stuff. So, but then we just want you to know your imbalance, which is your discount zone, where you can place your trade. So a clear, after you identify all of that and identify your order block, what you just do next is just place, for you to know the right place to place your order, where the institutions are placing their orders, right? Where they are checking to grab liquidity so as to push back the trade uptrend. Because why? You know that the trend in the market in this scenario is an uptrend like this, right? It's an uptrend. But then there's an impulsive move to the upside. A smart trader, a smart money trader, right? A smart money, you know, when smart money wants to join the market, it will push back the market, huh? This is the manipulation phase. The market, you will see it going up. Now they will have to push this market backward down here. They push it back like this so as to come pick order around here. And when they do, you will think the market is going downward, but it's not. They'll come and they will grab liquidity here, and then when you see next is boom. But for you to be able to get the right entry, to know where to place your order so as to not get stopped out, you want to be able to spot your imbalance zone, which is also an entry zone for you. So we either call it fair value gap, right? Which is the gap as well. You use short, or your imbalance. So we call it those two names. So you are able to spot your 3 Marabusu candle, and you know that there's a clear gap in it. If it's a strong one or a weak one, but then you always want to look for the stronger one, because that's always a clear indication for a nice trend. So now, for example, let's say your zone was around here, you saw the gap here, right? The next thing you do is you draw this, and then you know that market is going to pull back to this area. So the next thing you do is you place your entry zone and you put it here, and then you wait for the market to just come do its thing, and then you target, you put this slightly below your clearly. Normally, let me just delete this. You won't be looking for your, would show you other things that you have to factor into here to place a nice trade, right? Clearly you will see it around here, right? Because the other block will be around here. We haven't talked about it, but I don't want to fast forward too much. So, but then up to here, I believe we all have been grabbing the topics. So now you know market is going to do this, come back to this zone, pick order, and then do this, boom. So you want to be able to identify that using your imbalance or your discount zone, right? Will also show you how you can clearly get the nice entry. So when you have a strong trend using your imbalance zone, and the next thing you do is now use your buy tool now, and you place your order here, and you target the recent high, which could be this, right? And then you put your stop below the recent low. So let's say if you were targeting, this is not a clear something, but yeah, ideally this is what we are targeting, right? So you know that, okay, now let me just take this one out. You know that, okay, yeah, market has done this. Then you place your order here, and you know market, you'll be waiting for your order to come, tap order here, and then voila. But then the inverse is the case when you are trading for the downtrend. And we told you that if you are having a a market that is choppy, just stay out of the market, right? So if it's not a clear trend and it's just that. So is there a question? You're right. That's just what I wanted to. Okay. Yeah, okay. Sounds like food about. Yeah, Ijoma and okay. This is applicable to spot trading. Yeah, of course. Yeah, it is. It's applicable to spot trading. You know why? Because we don't want to be experiencing that, waiting time. You also want to, when you are trading your spot market, right? It's good that you don't have a waiting time because as a day trader, you want to be able to enter a trade and get out of it, right? Not to be stuck in a trade that will just keep your money for days and days and days, right? But then this is applicable for futures and any market. In fact, what you will get here, the knowledge we are giving away just like this is knowledge in which I charge a lot for. So, but then since I have this amazing community and I like everybody here, we are doing our best to make sure that you are a profitable trader and you have the right knowledge and guidance that you can get here. So yeah, I believe I was able to maintain the time. If any question is here, you can just drop your question. We have just, I think, 6 minutes to round up for tonight. So I believe I did justice a little bit to the topic for tonight. With Ocean, if you can hear me, please, yeah, you can take over, please.
Well, thanks so much, Abiola. That was an amazing presentation. Do we have any question? Do we have any question? You can unmute yourself and ask your question. All right, well, we don't have any question. Tomorrow we have our prospect meeting.
Yeah, for the person who's asking which is this applicable to sport? Okay, I answered this one. This guy said Simon Salahu. Yeah, that's trading view. So you can use it on your mobile phone. You can download it. If you're using your Android, you go to your Play Store, you download tradingview.com. If you are trading view, if you are using your iOS, you can also go to your Apple Store and you download it as trading view. If you are using your laptop, just go to your web. Depending on the web browser you are using, you just search for tradingview.com and it will bring it up. Ideally, also from your your normal exchanges, you will see your charts there, but it's not ideal to do your charting from your exchanges. You always use these tools to like you do your chartings. So we use this for technical analysis. So when it comes to the other analysis we do, like fundamental analysis, you would want to use more other tools that we talked about the last time, like your institutional calendars and more other tools like trading view. I say trading view, which is coin market cap, for example, for we crypto traders. So if you were to be trading other markets, there are other tools in which we use for fundamental analysis as well.
All
So
right,
yeah,
thank you so much. Okay, thank you so much. Tomorrow we have our prospect meeting. Please invite massively. We have a special guest tomorrow. So you would want and you would like to bring your guests. Once you bring your guests, don't worry, we'll take care of the rest. We have our special guest tomorrow, 8:30 p.m. Nigerian time. Invite your prospects, invite your guests. Please don't come alone tomorrow. please and please don't come. Make sure you come with at least 2 persons, not even one. Come with at least 2 people tomorrow. I probably might win a gift. You can come with at least 2 persons. You probably might win something. All right. Thank you so much. Thank you everyone for coming out, to our co-host. Thank you. And to our amazing members, to the amazing members that come out to learn every day. Thank you so much. If you miss the Zoom for anything, you can have access to the recordings on our YouTube channel. Okay. Our YouTube channel is posted. So I will need data tomorrow. Bring your people. Like I said, if you bring at least 2 persons, you might win something. So bring your people tomorrow. All right. Good night, everybody. And we'll see you tomorrow. Bye.
Guys, everybody. Night.
Good night, everybody. Udaro, everybody gets some real.
Hello.
Thank you very much. We're very grateful.